I now have $90,000 worth of Apple stock. I started buying Apple in October 2020, and after buying another 75 shares for $163 this month, I have a total of 525 Apple stock. That averages out to about one Apple stock per day. An apple a day keeps inflation at bay. With an average cost price of $139, that's a return of 25% so far. In this video, I'll share the role that Apple stock plays in my investing portfolio and my approach for dollar cost averaging Apple stock. Welcome back to Investing in Daren. Click subscribe to stay updated to more videos on Apple. 85% of my publicly held equity is on Tesla, and I intend to hold Tesla for the next 5 to 10 years. Tesla will be the largest contributor for my goals of financial freedom. What I need is a form of short-term liquidity, which allows me to make major purchases, like buying a Tesla Model Y later this year, which can cost up to 250,000 Singapore dollars because of high vehicle taxes. The maximum car loan threshold in Singapore is 60%, which means that I need to pay 40% upfront or 100,000 Singapore dollars by the end of this year. I believe that owning a car in Singapore is a luxury. I also believe that money is like health. The more the better, but that's not the reason why we live. All of us will die with zero net worth, and life is a gift that should also be enjoyed. Most of us would have short-term financing needs occasionally, from buying a home to paying for emergency medical expenses. The opportunity cost of selling Tesla stock is high, and keeping my money as cash isn't ideal because of low interest rates. This is where Apple stock fits in. It is relatively more stable than Tesla stock and has generated an average annual return of 22% over the last 30 years. We also pay 0% capital gains tax in Singapore, which reduces the cost of selling stock. It is not a risk-free strategy. In the 2008 financial crisis, Apple stock declined by 53% before recovering the year after. If this happens when I need the money, I would take out a bank loan for short-term financing. I will dollar cost average and buy Apple stock every 3 to 6 months with savings from my salary. And I plan to increase my holdings very incrementally at an average rate of one Apple stock per day. That is 365 Apple stock per year. With an average annual growth rate of 22%, my Apple price target is $220 by the end of this year. I feel that buying Apple stock is like easy difficulty, especially for new investors. Not the highest returns, but good steady inflation-beating growth. The company is cash-rich and has strong profits, a sticky ecosystem, and is well-liked by institutional investors. Most analysts have a buy rating for Apple stock. Warren Buffett said that Apple is his crown jewel, and is the largest holding for Berkshire Hathaway. To me, the next best alternative would be to buy an S&P 500 ETF, which has provided average annual returns of 9% over the past 30 years. Today's episode is filmed in Orchard Road. Orchard Road got its name because in the 19th century, it originally led to nutmeg plantations and fruit orchards. Today, it is Singapore's most popular shopping district. It is only fitting that a fruit company has its flagship store here. Wrapping up, some investors are all in, literally 100% into one stock like Tesla, while others hold a basket of 3 to 5 high conviction stock. Investing does not need to be binary, which is holding only one stock on one extreme or only buying ETFs on the other. I know most of you don't own Apple stock, and I hope this video gives you insight into why a Tesla investor like me does. If you found this video useful, please click the like button. Hit subscribe to stay updated to more videos on Apple. Take care, and I'll see you in the next one.